A very fun start to a very busy week, and it included some important lessons. Let's go through them. Number one, we're not the only ones able to create powerful AI, and China's not going to get left too far behind. They have been pretty far behind in just about every economic measure since COVID, and now maybe that gap starts to close a little bit, especially if we're going to apply a little geopolitical pressure. The timing to launch something that could create a fracture in demand and add more supply of AI onto the market, right when we just announced hundreds of billions. This is a pretty savvy political move, possibly from the Chinese. But this week, there's a lot else here that's going to either give us answers very soon or bring up some new ones. So let's take away some important lessons for today. Another one that's key is that crypto swings more than stocks. I've heard repeatedly from guests over the last year that that's going to change, and it still hasn't. The charts right now for equities still look pretty supportive, but for crypto, looking at BTC, it looks a little bit riskier. We learned today that crypto, which has got nothing to do with AI, dropped even more because it was a risk-off move. Bonds rallied. Right now, it looks like the chart there is dicier. So the green light that I've had on crypto goes yellow, even though stocks are staying here, and I'll tell you why in a sec. Some are going to go, well, of course, crypto yellow, you hate Bitcoin. Guess what? You can think what you want. Look at my coverage from the last year. If I pointed out last time around when I ended the love affair from being bullish from October in the breakout onwards to being bullish through the ETF run and then neutral to red for much of last year. The point here is trying to figure out whether or not price action and momentum is shifting. For stocks, it's a harder case to make than it is. For crypto, it's a little bit easier. Here's why. Firstly, the S&P 500, after putting in highs, does still have the higher high. The futures didn't make the higher high last week, but the index did. So the S&P 500 in the white still looks like it's very much in an uptrend. Now, you could argue there's chop here that maybe deserves a yellow light, and if we fail tomorrow, or if semiconductors don't catch a bid, then the yellow light will come on for stocks. This blue line, the SMH, this is a bad up and down. That's a really nasty head fake. We put in the highs for semiconductors, which was a breakout last week, and that was a fresh bull catalyst, according to my analysis, and I still think that. And the logic, I think, here still is that you're going to have tons of demand for what these companies need. But price is king. So if they don't come to buy semiconductors tomorrow at the very low end of this recent range after a false breakout, then that means stocks really might be in some serious trouble. But for now, I'm not changing. The green light stays on stocks. Now, Bitcoin and crypto is a bit of a different story. The chart there looks a lot more dubious in my mind. Firstly, because there's a current bearish divergence in the short term. You know I love to watch the bearish divergences. In fact, this is how I've been able to nail a bunch of the big tops in cryptos, because bearish divergences are very powerful things within the crypto asset class, which is a momentum-based asset class. Bearish divergences tell you when momentum to the upside is slowing. And it's very telling for Bitcoin because it generally goes up. And so looking at the margin and the speed at which it goes up is very telling. And so you have a short-term bearish divergence, which has been Bitcoin making highs without momentum doing the same. Momentum has been trending downward. You've also got potentially a lot of chop at the previous highs as well. The other thing, too, is if you go back to BTC, this was the RSI at the ETF launch, and this one's below it. So not only do you have the bearish divergence in the short term, you have the bearish divergence on the year, which brings us to the point I've said many times before, and this is where my crypto cynicism does start to kick in, is that even though I respect it as a price analysis, as a fundamental analysis, it combines with price, because on the very long-term permanent chart of Bitcoin, guess what you have? You have a bearish divergence. And to me, that means this is still the asset that has incredible downside risk and will swing more than stocks, and that remains high beta. And so even though stocks are green, they're very, very close to going yellow, and crypto will then go yellow to reflect potential risk off. The fact that we had bonds rally big today and the dollar firmed up with a bunch of stuff on the calendar this week tells us we might have punctured a little hole in what has been a pretty bubbly crypto and stock market. It's just crypto looks a little bit riskier than stocks do right now.